You paid more in taxes last year than Jeff Bezos did on $75 billion in wealth gains. Let that sink in. A guy with a net worth bigger than most countries' GDPs literally paid zero federal income tax on the majority of his wealth increase, and the IRS knew about it, and it was completely legal. So either the system is broken or you don't understand how the system actually works. Today, we are fixing that. My name is Raj, and I break down how the ultra wealthy legally avoid taxes so you can use the same playbook. If you are someone who is tired of watching your paycheck get glutted every 2 weeks while millionaires seem to be playing by completely different rules, stay till the end. You're taxed on income, Bezos didn't. Here's the thing most people get completely wrong. They assume wealth and income are the same thing. They are not. When your boss pays you $80,000 a year, the IRS sees that as income. You get taxed, federal, state, FICA, before you even touch a dollar. By the time it lands in your account, you might keep $54,000 of that $80,000. Now, here's what Bezos did. According to ProPublica's 2021 investigation, using actual IRS documents between 2014 and 2018, Bezos reported $4.22 billion in total income and paid $973 million in federal taxes. Sound a lot, right? Except his wealth grew by $99 billion in the same period. He paid taxes on $4 billion, not $99 billion, the other $95 billion untouched. Here's what most people don't realize: owning Amazon stock isn't income, it's an asset, and assets don't get taxed until you sell them. Bezos' net worth went from $18 billion to $160 billion in 4 years, and almost none of that triggered a single tax event. The IRS can't tax what you haven't realized. Now you might be thinking, okay, Raj, but I don't own billions in stocks, so this does not apply to me, right? There is exactly the mental trap keeping you poor. The reason most Americans can't access this strategy is because they are trained from birth to trade time for money. Salary, hourly wage, W 2. That's the system built for workers, and it comes with a price tag: the highest tax rates in the entire US tax code. The wealthy does not earn money, they accumulate assets that grow. Think of it like this: your paycheck is a leaky bucket, taxed before it even reaches you. Bezos' Amazon shares are a reservoir. They grow silently, untaxed year after year until he decides it's time to access them. According to a 2023 Federal Reserve report, the top 1% holds over 38% of all stock market's wealth in America. That's not a coincidence, it's a strategy. This is where it gets really interesting. So, if Bezos didn't sell his stocks, how does he actually spend money? Private jets, yachts, Blue Origin rockets, these costs real dollars. Where do they come from? He borrows against his stock. Money, banks will loan you money using your investment portfolio as collateral. You don't sell, you don't realize gains, you pay zero capital gain tax. You just borrow, and the interest on those loans often tax deductible. And here's the kicker: when Bezos eventually dies, under current US law, his heirs receive his assets as a step up basis, meaning the $18 billion in unrealized gains from 1997 to 2010 completely erased, tax free forever. The strategy is literally called buy, borrow, die, and it's been documented by tax law professors at UCLA and NYU. You accumulate appreciating assets, you borrow against them to fund your lifestyle, then you die, and your heirs reset the clock. The government never collects. Look, you are not buying Amazon stocks at $185 a share, hoping to become Bezos, but the principle is available to you right now. Step 1: stop prioritizing income, start prioritizing assets. Index funds, REITs, even a small rental property. Assets that grow without triggering a tax bill until you choose. Step 2: never sell if you can borrow. Margin loan, or HELOC, against appreciated assets lets you access value without a tax event. Step 3: understand tax loss harvesting. Apps like Wealthfront, and Betterment do this automatically. You offset your gains with your losses and legally reduce what you owe every single year. You don't need $100 billion to start thinking like someone who has it. Three things you can do today. First, open a brokerage account if you don't already have one. Fidelity and Schwab are both free. Buy one share of an S&P 500 index fund. That's your first asset. Second, Google buy, borrow, die strategy and read one article. You can also comment queries. Third, if you have appreciated assets already, call a free only CPA and ask them about borrowing against your portfolio instead of selling. One conversation could save you thousands. The IRS won't volunteer this information. That's why we are here. Look, 5 years from now, you're either still standing 30% of your first earnings to the government, frustrated, confused, feeling like its system triggered against you, or you have started building assets that grow silently in the background while you sleep. The system is tilted, but it's not locked. The rules are public, the strategies are legal. The only difference you and someone using them is information, and now you have it. If this changed how you think about money, smash that like button and subscribe. Send this video to one of your friends or many who are bad with money management. And let me know which strategy you're starting with first. I read every single comment.